Right now, I'm bullish on gold. I think gold is going to have another big run. I think something bad is about to hit the markets. That's what gold is telling us. When you look at the price action of gold, it's saying something's wrong. Investors are nervous. I like gold because it's a global barometer, it's a global trade. Whereas if you look at silver or mining stocks, they're more of like a North American speculative trade. So I think in this market situation, gold has more upside over the next 1 to 2 months than other things like silver or miners. Longer term, gold will hold up better than everything else than silver and miners if we're kind of comparing those if the market and when the market goes into a recession. But longer term, silver at the start of a new bull market, so maybe 6, 8, 12 months from now, say the market's reset, silver will get hit very hard. It's very volatile, but it will actually have the most upside, I think, when the market turns around and starts a new bull market. When gold shoots up, some of these companies are going to have some massive profit margins. So that's one of the reasons why I think they'll do so well. Once they are coming to life right now. We're starting to see gold miners and silver miners start to outperform gold a little bit, which is a good short-term bullish sign. But when the time comes, when the money flows are really, when the whole world's starting to pile into the mining space, then they're going to go ballistic. And there's hundreds or thousands of % return in a lot of these individual stocks. You just have to wait for that perfect environment. And I know a lot of people are thinking now is the time and gold's going to rally for many, many years right now. I do think gold's going to rally, but I do think we're going to go through some type of economic reset, and gold will probably struggle, and so will silver and miners. But after that reset is when I think the real opportunity for the miners are going to come to life. And you're right, as price of gold goes up, the profit margins for some of these go up like hundreds of % just because they're very leveraged. And it's going to be pretty exciting for a lot of these companies. I like when I get into the mining stocks, I like the royalty companies a lot. The companies that actually don't do the work, they just own the properties and they license it out. And so all these other companies come in, they spend all the money on labor and fuel and machines and digging and processing. And then the people who own the property are just like, yeah, we just take our cut. You guys take all the risk. We'll just take a piece of the profits if you turn some.
Despite optimism, the true breakout for miners may not come immediately. Many analysts believe a broader economic reset lies ahead, one that temporarily weighs on gold, silver, and related equities. However, after such a shakeout, miners could enter their most profitable phase in decades. Royalty companies, which lease mining rights without bearing production risks, may shine especially bright. These firms earn consistent revenue, while others handle the costs and risks of extraction. For patient investors, the post-reset environment could be the moment when select mining stocks deliver spectacular gains, transforming small investments into life-changing returns.
I think silver could rally with gold over the next month or two. It's got potential. For some reason, the chart doesn't show it having a ton of upside potential. Silver has a very messy chart. It always has. I've never been a big fan of charting silver because it's all over the place. It's always got these sloppy technical chart patterns that kind of negate each other, and they give you these false, it's really hard to kind of predict where it's going. But generally it follows the price of gold. It's big brother or big sister, whatever you want to call it. So if gold's going higher, we should see silver naturally go up. People naturally think silver, moves much faster, so they want to get into silver versus gold. It's not always the case, but I think we'll see silver move higher. It doesn't have the clean chart pattern like gold, where it's showing like 20 to 40%, in the next 1 to 2 months. Silver is a really messy chart. It's really only showing like 8 or 10% upside based on the chart patterns I have. So I'd much rather move to something that has more upside potential, clearly, than something that's a little bit messier at this point.
Silver remains notoriously difficult to forecast. Its price charts are often messy and volatile, producing false signals that frustrate traders. Still, silver tends to follow gold's general direction, often with sharper moves once momentum builds. Currently, its technical outlook suggests only limited short-term upside, perhaps around 8 to 10%, far less than gold's cleaner patterns pointing to stronger gains. While many investors expect silver to outperform gold, this is not always true in the short run. Yet over longer cycles, silver has proven capable of breathtaking rallies, particularly at the start of new bull markets following major financial resets.
So much. I'm not a fan of copper. Copper has definitely been really volatile. It was hitting all-time highs not that long ago, based on tariffs. Tariffs like created a lot of noise in that space, and copper prices shot through the roof. And then, of course, they just dropped and collapsed about 20%. So it's a really ugly chart. A lot of volatility. If anything, I'm more or less a little bit, I think, bearish on copper. Platinum and palladium, they've had a pretty nice run. They have volatile chart patterns. I'm pretty bearish on those as well. They've kind of topped out from what it looks like, and they've formed a bearish pattern, meaning a pattern that is pointing to more selling. So I don't think I think there's limited upside in those. You're really kind of, to get long, you're buying them in a downtrend, and trends are more likely to continue than they are to reverse. So if it's in a downtrend, you're best not to buy it because it's most likely going to continue to go down. That's the point of a trend. So I think gold is the play. I do think the dollar eventually is going to firm up and become a very good play late this year or early next year. I think if the economy goes through a recession, we're going to see the dollar index start to move higher. Of course, that'll mean probably gold is pulling back and the equities markets are falling. So I do like that as a potential play. And potentially bonds could become a play over the next several months. They're still in a downtrend. They're still trying to figure out if they've found a bottom or not. But bonds could become a good play. They're one of the most beat up, out of favor. And, when something's kind of forgotten and given up on and it's been dormant for years, which it has, usually it'll rise from the ashes and become a leader, right? So the biggest dog becomes the leader at some point, and that's how the markets just kind of rotate. So there's a few things I'm keeping my eyes on, but these are all big picture, stepping way back. All these take months and months to unfold. So that's kind of the big high level view there.
Not all commodities look promising. Copper, once boosted by tariff-driven demand, has become highly volatile, with steep rallies followed by equally sharp declines. Platinum and palladium, after strong runs, now appear to be topping out, showing bearish signals of continued weakness. In contrast, gold's steady demand as a safe haven asset makes it the standout play. While industrial metals struggle with oversupply and weakening global trade, gold remains resilient. Investors see it as a global barometer of financial stability. When uncertainty rises, gold often surges, reflecting deeper anxieties about currencies, economies, and equity markets worldwide.
Biggest thing, I'm a believer of only holding asset classes that are going higher. I don't want to hold something if it's going sideways or it's going down. That's not what we do as investors. We don't buy stuff to watch them go down. We want them to go up in value. So I have a way using technical analysis to identify if something is in a strong enough trend to say, okay, we want to own it, or it's not strong enough or going down. It'll be like, let's just avoid it for now. We'll just buy it later when it shows positive signs. So in this market environment, which I think carries a ton of risk, we have about 40% of our portfolio in cash at the moment. We're long equities. I mean, you can't fight this trend. The trend is up, and you've got to just be, riding the market higher. Eventually, we'll scale out of the equities position and we'll look for a play potentially in the dollar or bonds, or maybe sit on the sidelines. And we could get into gold with a little position if it starts to break out. It hasn't quite broken out yet. I kind of want to wait for that to take place. I know a lot of people are getting into gold now, anticipating the rally. I kind of play it a little differently. I buy it on the breakout, and so that you get an imminent move. Because what happens is a lot of people bought gold like 2 months ago, and it's gone nowhere. It's sideways. So that money's been wasted when you could have been in stocks making money. And so if gold starts to take off, it probably means actually the stock market's starting to roll over. So we would move out of stocks and potentially roll some money into gold. And when gold breaks out, it's a beautiful chart pattern. It should rocket higher, which means like pretty much the day we get in or the week we get in, it's just going to keep going up and up and up. And so our money's working right away versus waiting for a pattern that might unfold. I wait for it to unfold and then jump on the bandwagon.
Looking ahead, the U.S. dollar may firm up if recession risks escalate, temporarily pulling gold lower. Bonds, long out of favor, could also become attractive as investors seek stability. Market history shows that assets rotate. Yesterday's losers can become tomorrow's leaders once trends shift. For now, equities continue to rise, but smart investors prepare to scale out before momentum reverses. Many traders wait for confirmed breakouts before entering positions, avoiding capital sitting idle during sideways movements. In times of fear-driven markets, holding cash, hedging with gold, and watching for shifts in the dollar and bonds may prove essential.
Natural gas has just been pretty beat up. I think it goes through this huge 4-year cycle, and it's just gone through a big, massive peak in price. And I mean, based on the chart patterns, I think it's going to go back down to about $2 for natural gas. I think its trajectory is looking kind of weak for a little while. Oil, I'm not a fan of either. I think it's in a downtrend. It's pointing to about 50, 56, $57 a barrel as the next support level. And I think I mean, oil to me is a good barometer of how the economy is going. I think we've seen a lot of shipping, a lot of products, a lot of things are coming to a halt. A lot of people have paused orders because of tariffs. And, there's not a huge increase in demand or any increase in demand for oil, yet they're producing more oil. So it's not a good sign. I think the energy space is going to struggle for a while and move lower.
Gold's current strength suggests global unease. In the short term, gold is favored over silver and miners as the safer hedge. Yet when markets reset, whether through recession, debt crises, or monetary shifts, silver and mining stocks could become the true golden rockets. Their volatility cuts both ways, but in the right conditions, gains can be exponential. Natural gas and oil, meanwhile, face weak demand and downward pressures, reflecting slowing global trade. Ultimately, successful investing is about timing, owning assets in strong uptrends and avoiding dead weight. Today, gold holds the crown. Tomorrow, silver and miners may steal the throne.
Right now, I'm bullish on gold. I think gold is going to have another big run. I think something bad is about to hit the markets. That's what gold is telling us. When you look at the price action of gold, it's saying something's wrong. Investors are nervous. I like gold because it's a global barometer. It's a global trade. Whereas if you look at silver or mining stocks, they're more of like a North American speculative trade. So I think in this market situation, gold has more upside over the next 1 to 2 months than other things like silver or miners. Longer term, gold will hold up better than everything else than silver and miners if we're kind of comparing those, if the market and when the market goes into a recession. But longer term, silver at the start of a new bull market, so, maybe 6, 8, 12 months from now, say the market's reset, silver will get hit very hard. It's very volatile, but it will actually have the most upside, I think, when the market turns around and starts a new bull market. So right now, where we're in a real fear-driven market and things are unstable, gold, I think, is the better play. But once we have a reset, then I think silver and miners are actually the play. And that's the way I've traded in the past, is focus on where the low risk, high return is, which is gold, physical gold right now. And then when you get into a bull market, the high return, high risk is actually in the more risky stuff, the stocks and silver, because they can really scream and rip to the upside. I call them golden rockets. When the time comes, you just hop in and they just take off.